What's just firstly on the session?
James, I think it was a pretty positive session in the end, although we did close relatively flat. Of course, this morning we followed those pretty disappointing leads that we had from overseas markets. We were trading down about 0.7% during the session. So about 1 p.m. we started to see quite a significant turnaround in the market, really led by those financial stocks, particularly CBA, which initially was coming under a bit of pressure, but closing up about 1% in the end. So a really positive turnaround. We did hit a bottom of about 54.81, closing at about 55.18. So I do think it was a pretty positive turnaround, really being led lower by that energy sector, as you've been talking about, as well as materials. Saw a nice turnaround in those financials, and of course that staples sector was an interesting one today, as Rick has been talking about. Saw a lot of support coming back into Woolworths. Of course, as we know, over the last couple of days we saw Woolworths down about 7.6%, so clearly investors seeing a bit of support in the stock, and saw some buying back into Woolworths today. So despite closing relatively flat, I do think it was a pretty positive session in the end.
Look, any insights, Leanne, as to why the turnaround in the banks through the session?
James, as I said, I think it was particularly coming out of CBA. As we know, they came out with their trading update today. Initially, I think there was probably some concern around maybe in terms of those falling net interest margins, which, as we know, has been a big focus around with a lot of the major banks, and that I think probably provided some disappointment initially. But I think if we look at some of the other underlyings, the support that we did see in that very strong result that came through, of course, coming through from the lower bad and doubtful debt charges, which has seemed to have been a continuing theme with a lot of the major banks. Continuing cost discipline as well, which led to positive jaws. And of course, those low interest rates really supporting the demand for a lot of those home loans. So I think if we drill down into it, investors probably had a look a bit deeper and actually saw that it was a very strong update that did come through, certainly beating a lot of analyst expectations. I think at the second half of 2014 there was a bit of concern about a potential slowdown in CBA's earnings, and at that point we did see some analysts coming out saying that potentially 2014 was going to be the best year for CBA, but I think this update that's come through today may have put some of those negative comments to rest. So I think overall, seeing that turnaround, it was probably mostly driven by a turnaround in CBA.
Pick of the banks for you, CBA?
Probably CBA. We have a buy rating on CBA as well as NAB at this stage, a hold on Westpac and ANZ, but I do still like the underlying fundamentals within CBA. As Rick pointed out earlier, of course, we did see that pullback in the share price from the end of July. It was down about 11.5%, but since then it has actually recovered about 9%. Bell Potter did a valuation at that point, and they actually upgraded to a buy on the stock, given the fact that it was looking like quite good buying opportunities. And I think still retaining that buy rating, their internal generating capacity in terms of their capital still looks very strong, and as I said, the underlying fundamentals as well. So I certainly think that strong dividend yield, in the absence of potential strong sort of capital growth, I think really that yield will sort of continue to be supported, particularly for CBA. So do still remain optimistic on the outlook.
Leanne, a view on the outlook for CSR?
James, we certainly remain quite optimistic, despite some of those wobbly numbers coming through. As Rick mentions, I think our view is that we will continue to see steady growth in housing activity. But in addition to that, a potential weakening Australian dollar, I think, potentially could help CSR, and also a continued resilience in some of those aluminium premiums as well. So I think some of those factors potentially will continue to support some of the growth in their stock, in their earnings, and certainly support that share price as well. We have actually seen a bit of a pullback in that share price since their AGM, which came through on about the 10th of July. The stock actually pulled back about 12%. It has recovered slightly since then, but given the fact that we did see a bit of a pullback in that share price, and also some of the optimistic sort of fundamentals in terms of their outlook, we do still remain quite positive and optimistic on the outlook, particularly given that really strong result that came through today, which was well ahead of our expectations, certainly. So, yeah, we do like the outlook for the stock.
What about outlook for Transfield? Also a very good session. Takeover premium being factored in here. The board saying, look, we think we're over $2.
It's an interesting one, James. Of course, we are waiting to see whether we do get any sort of higher takeover bid coming through, but I think the fact that we have seen an earnings upgrade from the company today, now expecting those earnings to potentially be up to 30% higher than the previous year, I think that certainly provides quite good support in terms of a higher takeover premium coming through. Of course, we know that they did reject it. They have provided some limited due diligence, so it will be interesting to see what comes through. I do think in the absence of any takeover bid, though, the underlying fundamentals within Transfield still do look very strong in terms of those defensive revenues and also some of their high quality earnings, their tight management and also a stronger balance sheet as well, all really supporting that share price. So we sort of also might start seeing the company paying some dividends. They did indicate that today, and of course that's always pretty optimistic for shareholders as well. So I think the underlying fundamentals and in terms of those dividends do still remain quite strong, but of course the big focus will be on a potential higher takeover bid coming through.
Absolutely.